What's going on, everyone? In today's video, we're going to be taking a look at what's happening in the stock market right now and the giant events you need to know about that are coming up pretty soon. Now, April tends to be one of the best months of the year for the stock market, but this year might be a little bit different. We're just going to talk about, the bull case, the bear case, and everything else you need to know. Now, looking at the seasonality for the stock market, basically what we're seeing in the chart right now is like a day-by-day basically chart that shows the average return percentage as well as the percentage of times that that day is positive for April. So for example, let's say we go to April 16th, right? And the, day 16 of April, we can see that on average, that day tends to be positive 70% of the time. And then the average return is around 0.51%, which is pretty big for the S&P 500, especially when you're looking at an average. And overall, April tends to be a pretty bullish month for the market overall, right? And that's awesome. Now, looking at April of 2023, we're set for an interesting month in multiple different ways. So, over the past couple of weeks, the stock market has had quite the wild ride for many different reasons. Of course, there was a ton of panic selling because of the, I guess you could say, disaster we had going on in the banking industry. But it looks like a lot of those fears have passed, at least for right now. And now we're getting to a point where the market is actually trying to run up and SPY's actually back above that key $400 resistance level. Now, while that's great, there's more to the story. So what's interesting is that Michael Burry, I'm sure a lot of you guys have either of him or at least the name sounds familiar. He was one of the key players in the movie The Big Short, right? Where basically it was related to the Great Recession in 2008 and 2009. Now, basically, Michael Burry has been super bearish on the market over the past year or so, maybe a little bit longer. And he actually tweeted today saying that he was wrong to say sell, right? It's like no one was expecting this. And then he said, going back to the 1920s, there's been no buy the dip generation like you. Congratulations, right? So no one was expecting this, but it's so surprising to see Michael Burry say he was wrong, especially, in the way he said it, it's just very interesting, right? So, we're at a point right now where it's like, we had a lot of bad news, but it's like the market just doesn't care, it's just running up anyways. And, most of the time the market will run up, the market goes up a lot more than it falls, right? And there's constant buying pressure that's always flowing into it. So, for example, the stock market can just be have flat news or flat sentiment or just flat, I guess you could just say price action, right? But the thing is, it will always be easier for the stock market to rise than for it to fall because there's money from all around the world, whether it be pension funds or just, people investing in the stock market for their retirement or, people looking to protect their wealth or, anything and everything else out there around the world. Money is constantly flowing into the stock market, especially the S&P 500 in a very bullish way. And it just comes in week after week after week, right? Because people are just, investing all around the world, continuously, right? And a lot of that money goes into the S&P 500. So it's like, of course, we always see constant inflows like that, but it's just a reminder. It's like, sometimes you could have no price action or just mediocre news and the stock market can still pop up, right? And what's very interesting is that over the past year to year and a half, especially, inflation data has been the data to watch, right? It's been the biggest risk for the economy, and it has been so influential on the stock market. And what's interesting is that we actually have inflation data coming up on April 12th, right? The past inflation data reading came in at 6% increase year over year. And right now, the data is expected to come in around 5.8%. So still too high, but, good to show some signs of improvement. Now, what's interesting is that while this inflation data will be super important on April 12th, there's other key things that you need to keep in mind. So in the second to third week of April is actually when we have earnings season starting to heat back up again. So, all these major companies like Netflix, Apple, Amazon, all these major companies will start reporting earnings in, you could say a couple weeks from now, right? And that'll be very important, obviously, and it will bring in extra volatility. So that's something you definitely have to keep in mind. But on top of that, we also have the potential rate hike or pause. So basically, the Federal Reserve has been in kind of like a complete standoff between market pricing, and this is pretty rare and it's extremely important. So basically the Federal Reserve has been saying that they see like one more rate hike and they just see rates staying flat for some time. And then eventually rates coming back down, where the market's basically saying like, no, I don't think so, not today. We actually see rates falling continuously, right? And they basically been in this giant standoff, and it's been like a game of chicken to see which one, adjusts first, right? Right now, we're seeing market pricing showing around a 50% chance of there being a no rate hike, so the market just stays flat, and around a basically 50% chance of there being a 25 basis point rate hike. So this is very interesting because literally no one knows what's going to happen with this next rate hike. Most of the time when we look at, inflation or, the stock market overall or just bonds or anything like that, a lot of those are, heavily influenced by the actions of the Federal Reserve. And most of the time, we have a good idea of what the Federal Reserve is going to do because the market pricing generally aligns with what the Fed is saying, right? But we're actually in a very rare situation right now where it's like, that's not true. And now on May 3rd, we're going to have this giant interest rate decision. And like for the first time in a long time, there's like a lot of conflicting information and a lot of uncertainty because no one knows, like, are we going to see another rate hike? Or is it just going to be a pause? And like that's a giant uncertainty because most of the time we basically know what's going to happen. So that is very important to keep in mind. And not only do we have, the inflation data on April 12th, like I said, and then the interest rate decision on May 3rd, and the earnings season coming up towards the end of April, but we also have, like the unemployment data coming out on April 7th, GDP data coming out towards the end of April as well. So we do have some pretty big events scheduled for us, right? So looking at the market right now, it's like, what does this mean for the market? And one indicator I love to use is S5TH on TradingView. This is one of the most reliable indicators for like, you could say like identifying when the market's going to bottom. I've talked about this indicator so much in other videos, so I'm not going to go deep into it too much right now. But long story short, the main thing you need to know is that this indicator basically shows you the percentage of S&P 500 stocks that are above their 200-day moving average, right? Basically, when this is very low, like around 10 or 5 or 15, it means like, all right, so many stocks are oversold and it's probably a good time to buy. And then when the indicator is closer to like 90 or 100, it's like, all right, the stock market might chill out for a little bit, right? And where we're at right now is basically dead in the middle, like literally 50%. So it's basically saying like half the stocks in the S&P 500 are above their 200-day moving average and half aren't, right? And that just shows like mixed momentum. It's like, it's just, it's not overwhelmingly positive and it's not overwhelmingly, negative either. So it's like, it's just stuck at a weird point. At the same time, people will look at this and say, all right, maybe we'll see more volatility coming. And that's when I look to the volatility index, which is VIX. And basically this skyrockets whenever there's fear or panic in the market. And while we had the bank fears and the bank disasters a couple weeks ago, while this popped up high in a very major way, it just died down in a brutal way. Like the VIX went from basically 31 all the way down to 19 in just like a couple weeks. So it's like basically what that means in English is like the market was telling us like, all right, we are pricing in, some serious risks. It's like, what? This banking disaster is serious and it can lead to some serious problems, right? And it did in some ways. But the market basically right now is saying like, all right, like we're pricing in the same amount of risk right now as we were like before the banking disaster even happened, and in the same way that we were like towards the end of January and February really. So it's like the market's flat right now and it's not really pricing in any major risk right now. And that's not necessarily a bad thing. It just means like there's just not a lot of certainty, there's really not. So it's like going over, the next couple weeks and the rest of this week and going forward, it's like you have to keep in mind that overall the sentiment is just very mixed. It's like you can see, you know, stocks like Apple or Tesla or whatever try and run up, or even try and run down, but it's like you really are going to need some solid moves or some solid news to see moves like we were a couple months ago, you know? So it's like, one thing worth noting is like, if we look at the S&P 500, like over the past couple days, and like some of the major tech stocks like Apple, Microsoft, Nvidia, stocks like that, you know, like, yeah, it's been like more of like a slow grind higher, but it's like when we look at these day-to-day candles, they are not the same types of candles that we were seeing a couple months ago. Not even close. Like if we look at the candles on Nvidia right now, they're very, very small relative to like the candles we were seeing, you know, a couple months ago, right? Or a couple weeks ago. And you can see the same thing about so many other stocks. So then what does that mean, right? It means like, all right, you know, those are not the stocks to day trade right now. So it's like, where is the opportunity located? And it's like, it's with stocks that have the biggest news, right? So like Alibaba and other China stocks, for example, the candles we're seeing right now are candles that we haven't been seeing in a while, but in a good way. So like if we look at BABA, you know, we could see like, for example, a lot of the candles that BABA has had over like the past couple weeks and months have been relatively small and choppy and just like, you know, average and bland, right? But the candles we're seeing now are like, you know, that's some big energy with them, right? And it's like the exact opposite situation that we're seeing with a lot of, you know, big US tech stocks, whether it be Nvidia, Apple, Microsoft, or anything else. So it's like, basically what this means is going forward, especially at least over the next couple weeks, you have to look at the stocks with the biggest news if you're looking to day trade, because those are the only stocks that are truly seeing consistent good movement for intraday price action. And going into the next couple weeks, it's absolutely crucial to keep a very close eye on the bond market and, you know, what the market is pricing in for this next interest rate decision, because it will be very important. So keep that in mind. Long story short, we're going to definitely see some exciting moves over the next couple weeks, and we have some very exciting events scheduled. So if you guys like the video, make sure to subscribe. When you subscribe, you'll see my videos recommended to you more often. And besides that, let's have an amazing April of 2023.